Hello guys, Dave here, and sorry it's been a while since my last video. I did really want to get one out today, so I figured I'd make a quick one. It's going to be minimal editing, no thumbnail, really just want to give you the latest updates around my portfolio and my thoughts around RKLB and some other stuff that's going on with the stock market, and love to hear from you as well. Hopefully I'll be getting back to posting videos more regularly very soon. So today, as I look at my portfolio and the run we've had over the past few weeks, I tend to make these videos every couple of weeks. Stock markets, at least when you look at the S&P 500, NASDAQ, that kind of thing, we're pretty much at all-time highs. You can see we had a new 52-week high today. So stands to reason that my portfolio would be doing well as well. And of course it is. I'm not going to say I'm some kind of savant genius over here. But yeah, when the stock market is roaring, things are good for everyone. So how has my performance been over the last little while? Well, 1 month performance is plus 25%, which is obviously outstanding. There's been a ton of volatility lately and a really big boom on the markets that I have been enjoying. Do let me know your numbers down below as well if you're open to sharing, guys, even just the percentages, if not the exact numbers, because always fun to compare and figure out what we can be doing better. When you zoom out further on a 1 year basis, I am up 171%, which is also outstanding, needless to say. So very great year, a very great month right now for me. But once again, it's really the bull market holding all of us up here. So I think it's very important during runs like this, basically not to think you're a genius and that you can do no wrong, because these are the times when you're more likely to make those mistakes. It's not when the market's bottoming and at all-time lows or lows for the past several years. It's when the market's hitting new highs, everything's booming. That's when you're more likely to make mistakes, when you feel super rich and like everything you do turns to gold. So just keep that in mind. Continuing on, the value chart, I'm not quite at all-time highs here. Sorry, I do blur or cut out the exact numbers. I like to keep a little bit of the mystery alive, if you will. But in terms of the chart value of my overall portfolio, extremely close to all-time highs. We did just drop basically based on RKLB dropping a little bit lately. They were up at around $72 per share. I think they're now down into the mid-60s, so that did play a role, but very close to all-time highs and certainly not complaining about that at all. Okay, first up, I wanted to talk a little bit about this topic. It's kind of frustrating me, to be honest. I can't turn on CNBC or Bloomberg or basically any investing YouTube channel without the discussion being, are we in an AI bubble? What do you think about the AI bubble? What's going on? Blah, 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 blah. And yeah, it's getting a little old, to be honest with you. So just throwing out my 2 cents here. AI is a real transformative technology. Is the market kind of running away too fast, getting too excited, too overheated on these AI stocks? Perhaps, but I just don't think I can afford to sit out on a run like this. You never know when it's going to stop. It's really hard to predict a crash, and you do more harm to your portfolio by sitting out waiting for the crash than just riding it all out. Because you have these short periods of time that have absolutely amazing returns. And, you know, maybe it goes way higher from here and the crash doesn't even come down to the levels we're at today if the crash doesn't happen until, you know, next year sometime. So I'm not trying to predict it. I think I've been saying it basically for a full year plus now. Every investor, myself included, should have exposure to AI in their portfolio. Of course, things are looking a little bit frothier than they used to, but I'm just going to stand by that and hold. So what does this mean for my portfolio? Well, I'll give you guys a unusual look at some of my ETF funds that I don't talk about as much because they're less sexy and exciting. We have in here the S&P 500 US Total Market Index, TSX, so that's the Toronto Stock Exchange, probably a little bit less exposure to AI in there. Probably still some though, if I'm being honest. Of course, another S&P 500 index, the ZQQ, which I think their largest holdings, a lot of them are like NVIDIA and stuff like that have a lot of exposure to AI. It's a lot of high growth tech stocks in the QQQ and the ZQQ. Yeah, NASDAQ 100 and Invesco QQQ. So yeah, those funds do give me exposure to AI, even though they're not individual companies. And I've said previously, I think it's a good idea for every investor to hold some index funds that are a little bit safer than playing individual stocks. Although I do love my individual stocks, and we'll talk about that in just a second. But it's safe, it's responsible. If you want to YOLO on everything, that's fine. If you're, in a situation where nobody is depending on you and it's only your money and no one will get hurt but yourself. But if you have a family you're worried about and stuff like that, I think it makes a lot of sense to hold some index funds. Talking about individual companies, so the companies I own that have exposure to AI. Oh, and by the way, like I've held, index funds over a long enough term. I think you always do well. Like look at these, average prices that I purchased at versus where they are now, like 17 versus 59, 39 versus 127, 22 versus 45. I mean, it's not as, sexy as a Rocket Lab doing a 15x or something like that, but long run, you'll do very well in index funds and it's just safer. And then individual companies that I think have exposure to AI for me. Tesla, of course, which I really didn't expect to have the crazy run that it's had lately, going up to like $460 per share. A little bit more about that later because it still is the number 2 position, at least in terms of individual companies in my portfolio. Then I do have NVIDIA with about a 4x on. I bought around 55, now at 203. That's obviously almost a pure AI play at this point. Google certainly got exposure to AI, a lot of it. Microsoft as well, and Amazon. All these companies, have AI exposure. I wish I had bought Meta in here a few years ago when I was thinking about it, but I didn't, so that one isn't in there. But yeah, there's my AI exposure for you guys, and I'm not, jumping ship as of yet because, I don't think the crash is coming as of yet, and just timing it is too hard to try, and you're more likely to harm yourself than come out ahead. I know everyone likes me to check in with my core Rocket Lab shares, so this is the shares. Haven't touched them in a while. I did make some sales a while back. I think trimming was prudent after like a 10x, 15x, and also I needed to buy a house, I needed to buy a car. But I only brought my position down from 15,000 shares to 14,000 shares, so pretty conservative, really. And I know some people in my life are probably saying like you should just sell them all because you've won the lottery, but I love the company too much. So here we are on those shares. Continuing on, if you remember a week or two ago, whenever I made that last video talking about the short-term call options trades I was going to be making on Rocket Lab, and I was making, and this was all around the awarding of the SDA contracts for Tranche 3 that I thought Rocket Lab was going to win, their tracking layer, 18 satellite contract for like $700 million to potentially $1 billion plus. I bought a bunch of call options, started in maybe September and continued gradually buying until, a little while ago. And then I recently did finally just finish selling all of those contracts because Rocket Lab during this period went from like mid to low 40s to, at the highs like 72, 73. Right now I think it's probably at like 60 something, 63 maybe. Realized profits were $25,800. I purchased about, this is blurred out here. I had to make an edit because there was a issue with my math, but I purchased about $25,500 worth and sold out 55.7K. So realized profits were about 25 as well. Pretty much a double in about 2 months on these options. You really can't complain about that. So to give you a little bit of context, if you're not too familiar with options, during this period, the stock did not double. It only went from about 40 to, well, I probably sold on average around 62 or something like that. So yeah, that would be what, like a... Anyway, it's a solid move, but not a double, that's for sure. And I did achieve a double by basically using options to juice that trade. Very happy with this return. I was originally planning to purchase up to $50,000 of options, which is quite something for me, but I was feeling confident, and it ran up before I was able to buy all those, and I wasn't comfortable just going ahead with the buys after it already ran up so high. But great trade. Anytime you can get a 50% return in 2 months, you're going to take it. And I did better than I would have if I'd just bought the stock. So very happy with that. Now I will have those proceeds, probably use a lot of them to, keep for a rainy day, perhaps. I do know that I'll have a significant tax hit in the coming year, so I want to keep some funds available for that. And always good to just have dry powder in case opportunities arise or crashes happen, or you never know what. So that's my current plan for those funds. Pretty happy with this return. Interestingly enough, the contract I bought these around didn't materialize. I think it's because of the government shutdown that these contracts are not being awarded. So a lot of this was just the stock prices running up on macro news, and other companies like RKLB, like AST, other space companies running up as well. And I do think in the background there was some buying in anticipation of this by larger investors. So perhaps a little bit of luck on the macro side of things. But I think when you're putting a toe in short-term trades, you always need a bit of luck. It's just a fact of life that luck is a factor. You could have the perfect research, the perfect thesis for your trade, but there's any white swan event can throw a wrench in it and make you lose everything, whether that's a government official saying something, Trump and Xi Jinping getting into arguments again about tariffs and raising tariffs, something with a war, it could be pretty much anything. Any black swan event could throw a wrench in it. So yeah, luck always a factor with these short-term trades, certainly not for the faint of heart. Continuing, oh, by the way, and one more thing, I am thinking, since that contract wasn't awarded, I didn't want to wait forever for that shutdown to end. I also, didn't want to play it risky, and I just wanted to capture these gains. But if we get the news that the government shutdown ends, I may consider on the quick buying some more call options with the thought process that the SDA awards will be announced within, a week or two after the shutdown ends. So I'll see what the markets are looking like at that time. We'll play it by year because nobody knows when the shutdown will end, but that is something I may consider doing as well once that does happen. So continuing on, one other item, my Tesla covered calls. You may be aware that I've been selling covered calls on my Tesla shares for additional revenue generation purposes over the past probably 12-ish months plus. Been making a good amount of money per month on that, but it finally has run up significantly. I didn't expect it to go this high this fast, and it did get to a situation where the stock is in danger of being called away from me. But what I've continued to do is basically roll these options out and up and continue taking advantage of the implied volatility. To do that at no cost to myself, and in fact sometimes I even am credited money, and just continue doing those angle rollovers to increase what the stock would be called away from me for. I'm sure at some point there will be a pullback on Tesla, and I'm doing a pretty decent job keeping up with the stock run up for the most part. So we'll see how this goes. But originally the strike price was something like $400 per share, and I've rolled it over like twice or three times now to the point where the strike is now $435 per share. And I, even in this last one, made $690 on that as well. Because some people out there are just so bullish on the stock for whatever reason that they're willing to pay that much for short-term options, which, good luck to them. But this has been working out pretty well for me so far. Okay, guys, that is it for me today. Short and sweet one, very little editing, and I hope you don't mind. Please do let me know down in the comments your thoughts on this market, your thoughts on this AI bubble everyone's talking about over and over and over again every single day, what you're doing in your portfolio, any trades, what you're thinking Rocket Lab might do next, any other space stocks or anything else. Love to continue the conversation down below. Often sharing ideas works out very well. For me and my viewers, it's a two-way street. I often get great ideas from the viewers as well. So thank you so much for watching. If you're new here, I hope you do consider subscribing. And if you're not new here, thank you once again. See you next time. Hope you have a great day and a great rest of the week. Bye for now.